Boom! What's going on, Investomaniacs? Today we're talking about the wireless carriers, the telecommunication companies, AT&T, Verizon, Sprint, and T-Mobile. Up first, we're going to be talking a little bit about the T-Mobile and Sprint merger or potential merger. These two are going to be tied up in lawsuits over their impending merger. 9 states plus Washington, D.C. have already filed lawsuits trying to stop the merger. So what does that mean for us as an investor? Well, it means that they probably won't be making big moves in the 5G world, or at least as big as they otherwise would, because their strategy for expansion into 5G as an independent company, as opposed to their strategy as a combined company, are going to be different. Plus, there's only so much attention and time and manpower resource to go around. So right now, you have upper management in part fighting the government, primarily far-left politicians who are saying that the merger would decrease competition. This, of course, is illogical because even the combined Sprint T-Mobile company would still be significantly smaller than Verizon or AT&T. In fact, Sprint is doing so poorly, it's not even making money. It's lost money 9 out of the past 10 years. Since inception, the entire company has in aggregate lost $1.9 billion. Guys, the only reason this company even exists is because investors and banks continue to push new capital into the company. If new money stopped flowing into Sprint, they would be crushed by Verizon and AT&T. A third grader could understand that 3 strong companies is more competition than 2 strong companies and 2 weak companies, one of which is at the risk of going out of business if it can't keep raising new capital. I understand most moderate Democrats are perfectly fine with this merger, so I don't want to try and it's all those Democrats. This, unfortunately, is just, it's more of an elected official thing on both sides, Democrats and Republicans. The elected officials tend to be leaning towards extremification in today's society, and this is an issue I have on both sides. And this is how you can get these silly lawsuits, which don't make sense. Now, again, how does this affect you as an investor? I would say stay out of Sprint. Obviously, I'll like Sprint a little bit more if the merger happens, but I would say just invest in T-Mobile. That's such a safer way to do it. I like T-Mobile with or without the merger. I think they'll continue to grow and take market share from AT&T and Verizon. There is a lot more potential upside in T-Mobile relative to the big boys, and T-Mobile Tuesday is a total winner. I have T-Mobile and I open it every single week. I can't think of another random company that I do business. I don't with my water company or my electricity company. I'm let me open up my I don't even know what the names of those companies are. I pay the bills, but see, that's what I'm saying. They're such obscure, but they have done such a good job of actually connecting with their customers in part through T-Mobile Tuesday, and that's not something Sprint and Verizon, AT&T, they don't really have a little thing like that. And I'm not saying people are necessarily going to stick with the company because of that, but it does help people be a little bit happier with the company, and that does matter in the long term. And plus, CEO John Legere is a fantastic CEO. And just look at this dude. Come on. Just look. How can you not like this dude? I give it a buy. Now let's talk Verizon and AT&T, the big winners of 5G, literally and figuratively. Both ways you can say that. They're big because they're big companies, big winners because they're not tied up in a bunch of lawsuits about mergers and whatnot, so they can focus more, particularly Verizon, can focus more on 5G expansion. Of course, AT&T we'll get to that in a moment. They got some other stuff they're also focusing on. Verizon's Hans Vestberg was promoted from Chief Technology Officer to CEO a year ago, and he believes 5G is going to be in huge demand in the coming years, and that Verizon is poised to be in a strong position to take the biggest piece of that pie. Verizon is investing heavily into 5G and will likely be the dominant player in the delivery of 5G. Verizon has a massive 4.15% yield, but part of the reason the yield is so high, aka the stock price is so low, is because Verizon has made some poor acquisitions like Yahoo, HuffPost, and TechCrunch, which resulted in, I'm on Yahoo right now, pretty poor decision to buy that company, because pretty much other than investing, people like, I don't know anybody else that uses Yahoo, but they have this like weird little niche where people who do stocks still use it. But I don't know anybody else that does anybody else use Yahoo Finance? Does anybody see it like outside of the stock investing world? I don't know. Anyway, the point is they've lost $4.6 billion since that investment. So obviously not going too well for Verizon and not good for investors. Now, Go Rappin, probably slaughtering that, the executive VP of Verizon Media, hopes to shift the focus away from ad revenue and towards shopping and subscription sales. His plan is to make a one-of-a-kind integrated shopping experience in an all-in-one app. It's called Amazon. So if you're watching the next San Diego, Los Angeles Chargers, it feels so weird to say. I grew up in San Diego back when the Chargers were the San Diego Chargers, not the Los Angeles Chargers. And my dad still lives in San Diego, and he is not happy with. He hates the politicians who he's like, I'm not a Democrat or Republican. I will vote for who keeps the Chargers in San Diego. I'm like, but Dad, you still have the Padres. I don't want to watch baseball. I want to watch football. So anyway, so the plan is, you're watching the Chargers game in Los Angeles, and you're on your Verizon cell phone, and then you go to your Verizon Media app, click, 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 boom. Oh, you bought a jersey, right, or whatever, and you're back to the game. The plan is to make it easier for the 75% of Verizon users who have some kind of commercial intent to buy something through the Verizon Media app. Sounds great, except no. Because if I wanted to buy a football jersey, I'd think of like Amazon, Walmart, maybe NFL.com, anything like at all that isn't the Verizon Media app. And by the way, 75% of Verizon users are interested in buying stuff on the Verizon Media app. Where did that number come from? Because I bet 75% of Verizon users don't even know what the Verizon Media app is or that it exists. So, it doesn't really exist in its future form, right? They're trying to create this thing. But the point is, it just doesn't really make sense, this whole integrated shopping experience that they're trying to create. I have heard nothing that sounds differentiated to me thus far. Maybe there's something in the works, but all I'm saying is the sentence, I want to buy a sports jersey. I'm going to go on my Verizon Media app, is not something I have ever heard said in my entire life, and nor do I think it has ever been said in the entire history of humankind. And I'd kind of be surprised if it ever is said, other than this time saying how nobody ever says that. But look, I'm teasing slightly. I like Verizon. I like the yield. I like 5G. I missed it. That was supposed to be up when I made that joke. I like their push into 5G. I think they're going to do fantastic in that. And I do think the stock is a buy, particularly if you're looking for a big dividend, but maybe you want something that's more of a pure play in telecommunications as opposed to AT&T, or you don't like AT&T for whatever reason, then I think Verizon is still a pretty dang good buy. Let's call it what it is. It was a swing and a miss, with billions of dollars lost with Verizon Media. Now, AT&T is also bucking hard to offer nationwide 5G, but they got a lot of other stuff going on. While Verizon is putting much of their $17 billion worth of expenditures into upgrading their network so they can get ready for that 5G, That's chump change compared to what AT&T dropped in 2018. Last year, AT&T bought Time Warner, which includes the likes of all this stuff you can read here, things like Warner Brothers, Turner Media, and HBO. I love HBO, for $100 billion, which is almost as much money as I paid for Emilia Clarke's screen-worn Daenerys panties. Come on, is it just me? Is it just me? I mean, come on, is it just me? That's a lot of debt on any company's book, and in the words of one analyst, quote, terrifying. The stock price fell with the news of the acquisition, and a year later, the stock price is still down, but I think that's a buying opportunity. I think a lot of that risk has been taken out, and the company does have an aggressive strategy to start chipping away at that debt, including $20 billion of that debt by next year. They've got $26 billion in free-flowing cash, and that means that they can still throw money at the upgrades for 5G, even while having to deal with paying down the debt from the Time Warner acquisition. They bid $1 billion to the FCC on airwave rights for the frequency bands, which is much less than the Fed was expecting, which may indicate that these kind of millimeter bandwidths may not be so important to the future of 5G, although we don't necessarily know for sure. Also important to remember, Warner Media is a major moneymaker, and in time it may prove to be a smart move on the part of AT&T. I like it. I don't necessarily hate it, and I think that there can be some ways they can package things together which will be beneficial to the customer and help AT&T stand out in a way that Verizon doesn't really have the capability to package together because it just doesn't have the assets. Besides producing content for Time Warner and providing cell phone service, AT&T also sells direct TV subscriptions. For all you millennials out there, you know that thing that your parents have, how they watch TV? That's direct TV. All right. Now, direct TV is losing a lot of its subscribers. And I know you're like, what? DirecTV is losing subscribers? I never would have guessed. 500,000 subscribers just in the first quarter of this year alone. Wow. And you know where a decent chunk of those customers are going? Well, I mean, like a lot of them are dying, you know, because they're old, right? It's like mostly old people who have cable and DirecTV and stuff like that. But the other area that they're going, a decent chunk of it is going to Roku, on Roku's platform. And then, of course, on Roku platform, they can, you know, get Netflix and HBO and Hulu and all that fun stuff. So just like Verizon, right, where they have challenges, AT&T, it's a big old conglomerate. They have their challenges too, and DirecTV is not an area that I like, but it's a big old company, and overall, I like it. I don't think that AT&T is going to end up doing as well in 5G compared to Verizon, but I think it's still going to be pretty dang good, and I think the future of the telecommunications business in AT&T is still positive. I like the valuation a lot. I like the Time Warner acquisition and how they can hopefully bundle things together and create more compelling products for the consumer to both kind of come on to the business and then stay within that ecosystem and spend more money within the ecosystem, and at over a 6% dividend. This is one of the largest relatively safe dividends you can get today. I prefer AT&T over Verizon, but I think they're both good, strong companies. I think they're both buys. If you're looking for a pure play in telecommunications, AT&T doesn't fit that mold after the Time Warner acquisition. So that's something that you may or may not want to take into consideration. Now, by the way, this is my portfolio for full disclosure. Between the four carriers, which I know none of them, I'm not in this space, so I don't really have any dog in the fight, but between the four carriers, my favorite investment for younger investors and those looking for a little bit more growth would be T-Mobile, and AT&T is my favorite investment for older investors and conservative dividend investors. That's it for today. Hope you guys have a good one.